Welcome to the 10-Minute City Discussion podcast, where I, Nora, your host, will break some exciting news from Southeast Asia, a small but fast-growing region in the Asian continent. Now let's stream into our 12th episode, From Burden to Buffer, Why Debt Restructuring Matters. For this episode, it's my great honor to have the participation of our today guest, Francis Hoan, Director of Financial Advisory, Financial Alliance, sharing his viewpoints on Singapore debt restructuring landscape. Welcome to the show, Francis. How are you today?
I'm good. Thank you for having me.
Okay, sure. Francis, we've known that economic uncertainty is no longer just a corporate concern. For many individuals, rising costs and higher interest rates are turning personal debt into a pressing challenge, bringing debt restructuring into sharper focus. But when people hear the term debt restructuring, many individuals immediately associate it with personal failure or a last resort. In your experience, what does debt restructuring actually mean for individuals in Singapore today? How do frameworks such as the debt repayment scheme and individual voluntary arrangement type structures differ, particularly in how they balance creditor recovery with giving individuals a genuine second chance?
Yes, that's a very comprehensive question, but it's a very good question. Yeah, this mounting debt situation among individuals and personal debt is something that is very real,
Mm,
especially in recent years. Even last year, there was a publication that reported in the last quarter of 2025, there's $9 billion of rollover debts.
mm,
Yeah, meaning they only pay interest and the principals are not paid. So this is something that has caught the attention of the people in the news industry, but also the authorities in Singapore.
mm,
Well, in the past, it has been seen as something that nobody wants to talk about. It is seen like really a personal failure, there's stigma attached to it, there's shame to the family. But really, when you talk about debt restructuring per se, it is not about personal failure. Yeah, the various tools that can be used, it's really to help someone who is in this kind of dire situation to see that there's hope.
mm,
It is not about personal failure, there's really no embarrassment, there's no stigma attached to it. And that's why the banks these days are really open and they
mm,
welcome individuals to have their debt consolidated, if possible, interest is stopped, and help to really pay off the whatever balance of debt that is owing to them. Their intention, their objective is really to just to recover the debts and to help the debtor clear the debts with them. So it's a partnership. Yeah, so it's something that is very established in Singapore,
mm,
right? And apart from the debt consolidation plan, which in short they call it as acronym as DCP,
mm,
there's another one that is administered by the Credit Counselling Singapore (CCP), which is the debt management plan. Yeah, in fact, this under this Credit Counselling Singapore, clearing off debt can be much longer time. It can stretch to even 7 years.
mm,
Yeah, so this is to really prevent anyone to be declared bankrupt in Singapore. Yeah, and of course, if it moves to the other tier, at the next level, where these initial voluntary kind of debt restructuring is not being called upon, then it goes to the courts in Singapore, which is administered by the courts, is a debt repayment scheme.
mm,
In short, is DRS. Yeah, so it is best not to go to this level or even to surpass this level. Once this level is being breached, then all other means is being there's no more other means to really handle this except bankruptcy.
mm.
Yeah, so that will be quite a sad situation. So in Singapore, whether it's a debt consolidation plan or the debt management plan, it is all helping individuals to retain control of their assets and their civil rights and to make affordable payments so that they can really clear off their debts and they don't have this burden. Yeah,
Mm.
so that's a situation in Singapore.
So you mentioned about a publication last year telling that there is a mounting amount of debt these days. So do you think that individuals in Singapore tend to delay seeking restructuring help even when warning signs are already clear, such as rolling over credit card balances or borrowing to service existing debt? And from your work, what is the most emotionally difficult part of restructuring for individuals? Is it shame, fear of social stigma, or loss of control over finances?
So it has been quite difficult for individuals to come to terms with managing their personal debts for a few reasons. Yeah, one is of course being overconfident.
Mm.
Yeah, thinking that they are mounting debts, they are paying off their interest and perhaps their principal. One day, maybe in the future, the very near future, they might have perhaps a bonus from the jobs,
Mm.
a large kind of money that comes from somewhere, maybe strike lottery or something, and they can actually pay off their principal.
Mm.
Yeah, so that kind of thinking can cause one to delay seeking help, yeah, for restructuring their debts. Okay, and another one is also fear. So the second point is fear of facing reality. Yeah, so this is something that causes one to unnecessarily delay seeking help. Yeah, and the third reason is it's called cognitive overload. So this is something that is mental, it is psychological.
Mm.
Yeah, because it is when there's a lot of fear, a lot of anxiety, when debtors are coming after you, hounding you with phone calls, emails, and all that,
Mm.
that actually reduces your capacity to think clearly.
Mm.
Yeah, that's why it's called a cognitive overload. And
Mm.
that actually research has found that in that kind of situation, it reduces a person's ability to think clearly, even lowers their IQ.
Mm.
Something that is sensible and easy to do, like seeking help to get their debts restructured, becomes something very complex, very difficult for them to do. Yeah,
Mm.
so these are the basic three reasons why debts don't get clear and people don't get help. Yeah, and of course, fear has another aspect of social stigma. Yeah, of their families coming to get to know about it, it brings shame to the family. Yeah,
Mm.
so typically these are the three main reasons: fear, overconfidence, and connective overload.
Mm. Do you think when should they act immediately? What are the red flag sign that you would force, or I mean, you would encourage someone that, hey, take action now, not later?
Basically, just put it in four main zones: the green, the orange and the red zone. These are just like traffic lights. The
Mm.
green zone will be within 3 months, right? When you get a indication that either you have surpassed your debt has surpassed 12 months of your income,
Mm.
right? Or if your debt has actually surpassed an absolute value of 10,000, these are already so-called red flags, but they are still in the green zone in the
Mm.
sense that you can quickly address this easily because
Mm.
the banks will be very open to do a debt consolidation plan with you to discuss with you. Your credit rating has not gone down a lot, so
Mm.
the banks will be more open in helping you to restructure your debt. And of
Mm.
course, the other threshold will be the 10,000 absolute value, where credit counseling can actually come in and help you to do a debt management plan. So
Mm.
that is the best. right? But if let's say you exceeded that and it goes to the next quarter between 4 to 6 months, yeah, you still can be able to partner these agencies
Mm,
to speak with them. Like I said earlier, the objective is really to for the banks is to recover their money.
mm,
Yeah, so they will be very open to work with you uh, to design that consolidation so that they can actually retrieve also what they have loaned out to you.
mm,
Yeah, and credit counseling Singapore is a social enterprise. So it is something that set up recognizing that there is rising issue and problem in Singapore,
mm,
and they have frameworks to actually help individuals to be able to really clear their debts and start off a new lease of life. Yeah,
mm,
and if this aspect of 4 to 6 months is actually being breached, when it goes to the next quarter, yeah, that's
mm,
7 months and onwards, then uh, very likely your credit rating has actually worsened very much, and that makes it a bit more difficult. Yeah, this will be like almost a red zone already.
mm,
So really, if you were to surpass that, then when the courts comes in, you still have a chance, yeah, to perhaps do debt restructuring of some kind with the courts. Yeah, but that becomes a bit more rigid as compared to the banks and the credit counseling. Yeah, so the
mm,
best time to look at the debt and really to handle it is within the first 3 months.
mm,
Yeah, otherwise, really 4 to 6 months within half a year, you should be really getting help, seeking help. Yeah, this is the best period to get this off your shoulders in the hopefully the shortest time possible.
mm. Really appreciate your advice. I feel like it's like a very comprehensive, and it's also an advice that I think it's very helpful to help release the stress among people who are under debt, that if you are still within the first 3 months, you still have more chance. And I think they should better plan out their financial management in order to, I would like to say, maximize the green zone within this 3 months. Mm.
That's right. Yeah.
Okay, so coming back to the next question, we know that rising interest rates, higher rents, persistent cost of living pressures have hit household hard. How have these factors changed the profile of individuals seeking restructuring today? Are you seeing more middle income earners, professionals, or gig economy workers coming forward?
Yes, in fact, the trend in 2025, a new debtor profile, based on the report, it is younger. They are younger
Mm,
people, and they are, very savvy in using digital tools. Yeah,
mm,
so the counseling centers are really seeing a shift from older debtors to those in their 30s and 40s. And one of the reasons they cited of this mounting debt among individuals or this group of people 30 to 40s, it's one thing that is called BNPL, Buy Now Pay Later scheme,
mm,
and also the subscription based lifestyle, because this tend to obscure total spending.
mm,
It is like now you have $500 and you are just able to afford something that's $500. Now that you can spread over 6 months, yeah,
mm,
it becomes like less than $100. You can actually buy something, and the rest you can actually pay off in 5 months.
mm,
So now with the $500, the initial payment is less than $100. You can buy another four things, let's say. Yeah, and then the debt becomes like $2,000.
mm.
Yeah, with the $500, you buy five things, but then you incur a debt of $500, and you think that, oh, it's easily paid off.
Mm.
Yeah, it is, but if let's say you just combine with subscription-based lifestyle, you have gym subscription, you have many other subscription that actually just lead through your cash flow,
Mm,
then it's that's where you're not conscious what your total spending is each month.
mm,
And coupled with the stresses of life, at work, with families, sometimes you don't pay that much attention to what's happening to your financial life. Yeah, so that slowly snowballs into something that's quite big, and then you find that wow, now it's quite difficult. It's a big challenge to handle.
mm. Okay, so now we can see that young people, they are facing such a big challenge. So do you think that banks and creditors become more cooperative with individuals now, or they may be more conservative compared to a few years ago? And what are the most common mistakes individuals make when negotiating with creditors on their own before entering a formal restructuring program?
Okay, I think this can be a bit complex for someone who's facing this for the first time,
Mm,
because there's such a thing called unsecured debt, especially with credit card, personal
mm,
loans, and then there are also debts that cannot be consolidated into a debt restructuring plan. Yeah,
mm,
for example, your student loan, your renovation loan. So
mm,
these are the kind of loans that has to be separated from unsecured loans. Yeah, so you have to be aware what the banks are willing to consolidate, and this as I mentioned is unsecured loan. So this includes your credit card, your things like your personal loans. So these are things that can be consolidated, and it's important then to start early, as I said, because when you start early, like within the first 3 months in the green zone, banks will be more open to really discuss with you and work with you. One of the things that perhaps you can request, the best thing that you can do, especially for credit card loan, very aware and conscious that credit card loan in Singapore, the interest is really high,
mm,
right? It's between 24 to 28% per year, right? So the best thing that you can do to negotiate with the bank is to stop interest. Yeah. So once you stop the interest and it's consolidated as a principal amount, then you can be more confident to work out something that can be paid off in 3 to 4 years without
mm,
mounting interest. Because if you're not conscious, compounding interest is really scary.
mm,
Yeah, a small little loan, you can imagine that if let's say it's 28%, right? Very quickly in let's say about 3 years, you actually incur something that's double that amount. Yeah.
mm,
So it's quite scary. It mounts up very fast. Yeah. So the other thing is about student loan.
mm,
These loans usually is of a lower interest tier,
mm,
right? So maybe it's something like less than 6%. So
mm,
instead of trying to pay off a loan that maybe it's of a bigger amount for tuition fee loan, and then your credit card is maybe like 5,000, your tuition loan is 20,000. So to an individual, they may think, oh, I have to quickly pay off a 20,000 first,
mm,
right? Thinking that it's a bigger amount, they want to tackle this first, right? Logically, it makes sense. But when you look at from the interest aspect, it doesn't, right? So the best thing to do is to pay off your higher interest rate loans first
mm,
with the banks, and take this tuition fee loan, renovation loan that is of lower interest rate.
mm,
You can work out a longer term repayment plan with the banks, right? To either freeze or pay
mm,
off the high interest rate loans much faster. Yeah, in that way you prevent your total portfolio from being really ballooning so much. Yeah,
mm.
so I hope that helps in getting a bit more clarity how you can handle your debt and your loan repayment.
So one last question from me, Francis, because you just mentioned about the burden in heavy debt. So if you have to give individuals under severe debt a 90-day reset checklist, including critical actions they must take to stabilize their finances and avoid deeper trouble, what would be on it if you have to pull out a few bullet points?
Yeah, the first thing is be very conscious that once you have a debt situation, quickly nip it in the bud in the sense that if it's best if you can clear off firstly your credit card every month, clear
Mm,
off that don't owe anything. Yeah, because not only they charge interest, they charge a very high admin fee of say like minimum $100 finance fee for credit card
mm,
overdue. So these things can really add up, right? So my advice is for credit card repayment, always set it to gyro.
mm,
Yeah, and make sure that you pay off every month. Never let this go, right? Whereas your other loans, if let's say you're a little bit late, there is finance charges and all that, but it's still usually much lower than credit card. And
mm,
never borrow to pay off debts. Yeah, one common mistake is to when they are really stressed out, as I
mm,
mentioned, this connective overload. Sometimes they don't think clearly and they want the fastest way out to reduce the pain. They go to money lenders.
mm,
Yeah, and this compounds the problem.
mm,
Yeah, so yeah, please, if you do have a problem, reach out to the respective agencies, the banks, the credit counseling Singapore, but never go to the money lenders. Yeah, because that really makes the situation worse. It does make the pain go off for a short time, but it's very temporary in nature,
mm.
right? Yeah, best is to work out with the agencies a definite plan to have a repayment scheme.
Mm. Okay, really
I hope that helps.
appreciate. Yes, it really helps. I have to say, your sharing just remind me of my past when I also took up a loan, a tuition fee loan. Yes, at that time, my focus was like all in on my fresh grad income because I believe that the loan was something that
Yeah.
very bad. It would be like a big burden, an obstacle for me. So I try my best to all in my income to repay the loan as fast as possible. And for some reason, I started to feel a bit fearful when it came to registering another loan in the future, like a loan for house renovation, mortgage for house buying, for example. After having a nice chat with you today, I can see that actually, whenever you have a loan, if you have like good financial planning, good financial management, and also have some strategy in debt restructuring, I think we can optimize it as I would like to say like as another option, as another financial option in order to help finance different life activities as well. Mm.
Yeah, that's right. Yeah. Thanks for sharing that. The information does help, and I hope they help more people.
Okay, so thank you so much, Francis. That was a long but nice chat with you. It's really my pleasure to have you here with me today. Thank you for your viewpoints, and I hope we'll have chances to talk again and wish you all the best to come.
Thank you for having me.
Okay, thank you so much. So that's the end of today's episode. I hope you enjoyed it and found the news interesting. For your convenient reference to further details of the news I mentioned, please find the links to my blog page in the description, where I have compiled all the related information. If you have any questions, or you want to discuss more on what I shared today, please leave your comments below. I would love to talk to each of you more as well. You can search for more episodes of this 10-minute C discussion podcast on Apple Podcasts, Spotify, YouTube Podcasts, and my own blog page. Thank you for listening to today's episode all the way to the end. And I hope to see you again in my next episode of 10-minute C discussion, which will be released soon. Once again, this is Nora, your host. Thank you so much and goodbye.